What is up, YouTube? This is the Working Investor. I actually had one of my subscribers asked me, what is my next steps to grow my portfolio out after I complete GIAX and AIPI? And I'm actually looking into YMAX. I looked into YMAX several times, and I'm looking at it again with new eyes. And I'm starting to warm up to this underlying. I know a lot of people claim that it's like the wastebasket of YMAX, that every single company that YMAX has and every new company that YMAX introduces gets dumped into this basket. And some of them, some of the holdings that YMAX has, some people may like, and some people may not like other holdings. And you could see here that since inception of around January 17, 2024, so this year, it's down 11.36% in price in just about, like 10 to almost 11 months, 10 going into 11 months. So some people are not too happy about this. And then if you go into seeking alpha total returns, I guess we should do year to date because it's been around since this year. So it's about, 18. The total return accounting for the dividends is about 18% total return, which is not too bad. But one thing I want to talk to you about is if you look into the dividend distributions, and of course, YMAX used to be monthly. So you see initially when you see 53 cents, looks like that's on the lower end. That was when it was monthly. And then we're here where you see 22 cents, that is weekly. So 22 cents weekly is incredible, because if you're talking about, YMAX trading, let's say it started off at $20. So it ranges so far between $17 and $20 or high 16s to 20. So if it returns, in very simple math, if it returns 16 cents or 17 cents to 20 cents in dividends per week, that's about a 1% return per week, and there are 52 weeks in a year, so it's very easy to figure out that about 1% return per week is about a 52% annualized return. So it's very easy to do that kind of math. So even here where you see the 20 cents in the 20s and here you see 17, that's still almost about pretty much around 1% return. So it's been consistently paying off about 1% return every week. So again, past performance is not indicative of future gains. And obviously you see here in the beginning they were paying 53 cents, and 53 cents, that's less than 20 cents, per week. That's actually around I did the math, I think it's around 13 cents or something per week then. But one thing you need to bear in mind, the YMAX of yesterday is not the same YMAX of today. You cannot compare that drop in price then to the price now. There are a lot of changes that occurred. Let's look at the holdings, and you're going to see something interesting. Number one, since inception of YMAX, YMAX have added many, many, many more funds. And they don't do the inverse funds. They don't do the fund of funds. They pretty much do all the cover call, synthetic cover call funds, right? That's what they typically contain. So they picked up recently, for example, Taiwan Semiconductors. They picked up super microcomputers, right? So that's one thing. The underlying of this fund is much greater than prior. Another thing to consider is that if you guys recall, YMAX doesn't just do cover calls, synthetic cover calls in their funds. And I'm sure you know one of the cool things about YMAX is they are able to do this opportunistic trade, that's what they quote unquote call, which is basically doing call credit spreads, which is able to capture more upside. So even when the stock goes against them, they can still capture more upside with call credit spreads. So they have this change in prospectus, they have a change in underlying, and as you see here, this is the holdings from the website of YMAX, and you see here that they hold all these underlyings of their covered calls, but you also see here BITO. They also do some trading, their own type of trading in BITO. That is pretty cool because we know that Roundhill has a fund that's based off BITO, BITO is basically future, it's a trade on futures from, I think it's ProShares. It does trading on futures of Bitcoin, and they basically roll it month to month, and they command a nice amount of premium if Bitcoin is neutral to up. If Bitcoin goes down, then when they roll it from month to month, it could be less. So it's not always perfectly going to be very, very high. You can't anticipate that all the time. So Roundel has a play on BitTo. Defiance has a play on BitTo. And of course, RecShares just started opening up a fund that does a play on BitTo. And here you go. YieldMax also does plays on BitTo. So not only is this fund, the holdings have significantly increased, and they're going to keep increasing further and further and further diversifying the fund. They also have the new strategies which they've implemented I guess in the past couple months or so, if you've been following, with the call credit spreads, and they have now BitTo. And as far as a diversification standpoint, look at what they own. They own, like, let's say, if you're into the AI sector, they got AI sector. They got Airbnb, which is the vacation sector. If you want international exposure, they got Babo. They got China. They got Taiwan Semiconductors, which is Taiwan. So you got some international exposure. If you want commodities, they have GDXY, which has gold. They have oil, I think ExxonMobil. So they have commodities, they have international holding, they have all kinds of different sectors, banking, tech sectors, Bitcoin exposure. So they are pretty, all over the place in all these different holdings. Even ARK, which is based on ARK, that is a little bit of a fund in itself. So they even own a fund that owns a whole basket of funds. I'm not the biggest, if you're not the biggest fan of Cathie Woods, but the point is it has even a fund that has other funds. So basically it is, arguably you would have to say it's pretty diverse, and the diversification gets, further and further, gets better and better as they add more and more holdings. Not all the holdings you may like, and not all the holdings may be a winner. That's the downside, but that's when you hold any type of ETF. But the point is, I'm starting to like this fund because the weekly is definitely a cool plus. It's not the main reason for it, but the main reason is for like I always look for risk adjusted returns, and I look for, a nice yield of at least, targeting around 50% or more. And past performance is non-indicative future gains. And right now we're going into earnings season when they started in the weeklies. So we're going into election season, so that could be pumping up implied volatility out there. So, for the time, but I am kind of warming up to the fund. And you have to argue that this is not the fund of YMAX today, is not yesterday's YMAX. So that's why I look at it with new eyes and a new perspective on it. And I'm just thinking this is definitely one of my higher contenders, what I want to possibly build up in the near future. Anyways, let me know what you guys think about YMAX. Do you love it? Do you hate it? And specifically, have you looked at it recently? And what is your opinion on it as of now with the new contemporary information? Anyways, I hope you guys enjoyed. This is The Working Investor over and out. Have a wonderful trading day.